This is just Amazon on Wednesday, September 26, 2018. And this this day just moved amazing. So I hardly looked at the chart today, but looking at it now, it's like, wow, look at the framework we've got with just these two lines. The line at 1972.50 and the line at 1990. I mean, so yesterday I was talking about getting a pullback down into 1955 to 1960. Didn't quite get there, like so close. But you got three wicks down here, like right at what is this, 1961.63, 1961.77, and 1961.52. I I don't know why there. I really wanted it to get down to 1960, come down, touch some of the highs, these pivots somewhere in here. Didn't quite get there, but I mean these these wicks are right in here where this was breaking out. Yesterday, that these candles through here just breaking out of this the highs here. Came back and retested that's fine. It's a really sharp S curve. Doing this kind of really large candles to start out the day. Worked its way into some smaller candles. Looked like it was going to roll over again right off of 1972.50. Get these two candles back to back, a bearish engulfing, and then a break higher. And that actually rallied right on through 1972.50, came right back and touched it. I mean, look at this low, 1972.46. 4 cents away from where this line is, and just ran straight into 1990. And then we just chopped around for a little bit, did a double top in here, rolled over, came back up to the neckline, did a double top again into that neckline, rolled over again, came right back into this pivot here, which was our pre-market high. I mean, look at this. We had a couple of really small volume moves here, but right in this level is where you ended yesterday and started out today with, actually a little bit of pre-market trading. Came right back into those levels, bounced again, just rallied out of that. And there was some FOMC announcement or something, 1 o'clock on Wednesday. That's when they usually do that. And, this is why, I think that's why this kind of paused through here, just kind of grinded lower and then just broke out almost 1990, pulled back, got on through it. This is looking like a stair step through here, pulled back, some indecision right on the 1990 price, rolled over. This was actually a nice little move here. Let me zoom in on this. So this is a bearish gap and go on a 5-minute that, you closed right at 1990, 1989, 96, and then gapped down. And actually the open, let's see, the open and the high are 9 cents apart. The open was 1989 and the low here was 1989.19. So it actually gapped below that candle entirely. That's just a really strong bearish signal on a daily. And it did it on a 5-minute. From 1:55 to 2 p.m. Central. Moved down a little bit, took out the low. So that's kind of the next, the second signal that, hey, this could go lower because we're taking out these lows. Retested into 1990. This was looking like it was going to rally on through it again. So, I mean, with this move here, I mean, you could just set up either to get in here with a stop up here, or get in at this price on a retest with a stop up here. And either one of those, had you left the stop in place, would have worked really well as this retested, and this is your bearish S curve then. And in 5 candles went very quickly down, just like this went up with like 10 candles. In 5 candles, it moved from 1990 all the way down to 1972.50. And so there's just some signals saying, hey, this, we're making, we made a high, made kind of a relative high, made a lower high, slightly lower high. Okay, we're rolling over. And, on the daily, it's a very nice indecision candle. Had a really nice move up into 1990, pausing there where there's some other selling going on. Didn't quite get the pullback I was looking for on the daily. Had a little bit of a gap down to open, but then stayed strong, stayed bullish. So if we jump in to some of this in here and see, okay, here's that retest, an amazing retest right back into 1972.50. The low on this candle happened at 9:50's 5 minutes. So let's go look at the call. At 9:50, that low is 14.20. Now it would have been hard to do $100 risk getting in here. The breakout was kind of lower highs and higher lows, a triangle. And this is where you would have had a breakout. So, some indecision, some smaller candles here would have been breaking out, retesting. The only thing you could really do is, maybe get in and retest from 1450 by maybe 13. So that's $150 risk, not 100. We're always looking for 100. Nice round number to do it. So not sure if that would have worked here. Now, another price to look at is the lows here. And we had the lower wick on all three of the first 5-minute candles that came down to about the same price. The only one that actually came down a little lower was the bearish one. Makes sense because it's selling off. It's going to take some premium out of the calls. The price here, the low, was 10.50, and that actually retested the high in here. Not quite these candles. This was 10.30, but this was 10.75 and 10.80. So it retested the initial, early morning high from yesterday's movement on the 1975 call expiring this week, and actually kind of retested this breakout point. And then from there, it was higher the rest of the day. So just like the 1950 call that I wanted to hang on to through yesterday, gave you an opportunity to buy back in when it pulled back down like this. And talk about the 1950 call, just because that was the one from a couple days ago. So let's see. So I was talking about from Monday. Yeah, so this price, this level came right back down into that price. It was a great opportunity to get back in if anyone was just exiting at the close. And then that just moved higher the rest of the day. And same with today. This low here was retesting the high here, the highs prior to your breakout, essentially. And then, that was basically your retest. And then it was higher the rest of the day, both on the 1950 strike and the 1975 strike. Had you been trading that, I mean, look at this. Had you gotten in anywhere down in here, let's say you were somehow gotten in at 251, it went up to 250 or to 25. That's 10 times, so I mean, it's 10 times, so you would have made, 9 times your money. So that's the potential on these when Amazon just really gets going. Come back in here, looking at what happened yesterday, we really didn't have much of a consolidation with a triangle. We had a little bit here with a flat top and higher lows, but really, this triangle here, the lower highs, higher lows, worked out really well on the option. And you can kind of see that here on the stock as well. It's a little hard to see it because of these wicks, but we definitely got some lower highs. This gets to be the indecision point that's just continuing to be bullish here. So if you're watching this form, so we'll step back into what we do sometimes of looking at the day. So if you're looking at where this is right now, I can see a triangle in that. I can see a triangle forming in this. It's nicely got the exponential moving averages right here, where you've got just some lower highs, higher lows, and this could be a good place to look for a rollover or look for a breakout. And if you're going to get in for the breakout, wait for the retest, because it's been so bullish. We don't want to just jump in as it's moving to a new high. Look for the retest. Got a little bit of squeeze forming. Okay, that's a good enough story for me. There it goes. It starts to break out. Squeeze hasn't triggered yet. We got a retest. Get in with an entry here and a stop down here to be conservative. A stop way down here to be really conservative and to be really aggressive. Even though that looks like a evening star reversal, get in on this candle and a stop down here somewhere, thinking, well, here's a triangle. I just want it to go higher. If it doesn't, I want to get stopped out. That's your setup. And so the next, let me zoom in some more. It's hard to see it enough. There you go. got our bullish momentum, got the squeeze breaking out. There we go. Trigger the squeeze right there. Continues on up. Our target would be 1990. That's the next line in here. There you go. You're out. So had you gotten in here, let's say you got in on this candle and you got in at 15 by 13. Let's just use some round numbers. 15 by 13. So $200 risk. And you just held on until it got to 1990. You got there somewhere on this candle. Let's say you got out conservatively 24, maybe 23. So from 15 up to 23, that's 8. $200 risk, that's 2. 8 divided by 2, that's 4R. That's a nice move. And you caught that because it went from one line we've got down here at 1972.50 on the stock up to 1990. And the same thing happened reversing here. So if we go look at the puts, this is the 1975 put. This was just going sideways through here. This is pretty far out of the money when we're up at 1990, but it's only 15 bucks. It's not that bad. Nice small values. You had some candles in here that were, easily under 100 bucks. And, we had a bit of a breakout and then a retest. This is that, breakdown. Let me go back forward. That was this breakdown and retest. So you're looking at these candles, an upper wick here, inside candle, and breaks down. So you're getting in on this candle. This is the 230 candle. Here's the 230 candle right here. Maybe you're getting in for 806 with a stop down here at 7, something like that. That's $100 risk. Had you bought on the lows before it triggered, you could have set it up getting in like 750 by 650, just doing $100 off the low or below the low in case it actually moved up higher. That's more aggressive. That's more speculative. So actually waiting for it to roll over, getting in on that next candle, getting in here, even if you had gotten in here, say 850, even 9 with a stop at 8, or 850 with a stop down at 750, it would have still worked. It just would have been something that you're a little bit too close in the stop, but that gets you the $100 risk. Anyway, those moved up to the level here where they had pivoted before. So you'd want to be taking all your profit to some of your profit as it's getting so close to the close. So let's say you got out at 12. So that was, if it was 9 by 8, went up to 12, that's 3R. If it was 850 by 750, it's 3.5R. It just get out at 12. Now, had you just held a little bit longer, got out at 14, that's even more R's. So again, would have been somewhat speculative to get in too early. Would have been looking at some of these levels that aren't drawn in. But if you see this rolling over, you want to get out a little bit right here at this pivot, get out a little more at this pivot here. You can do that, and then had you gotten the rest out right here at 1972.50. If you're trading the shares on this, that it makes sense to take this, take a little bit out, take a little bit out, take a little bit out. But if you're just moving that quickly, you may not even have time to react to do that. You might even just tighten your stop a little bit. It's like, oh, I like seeing this where it's a small candle, a little bit bigger range, a little bit bigger range, a little bit bigger range, a little bit bigger range. So the range on these were 231, 307, 490, 719, and 777. Increasing range on these candles. I love seeing that. This does look like it could have a little more of a sell-off. This is a really nice distribution today. We zoom out and see where we're at. This is one thing I forgot to look at or forgot to point out. This is a V bottom on the 5-minute. That's a really nice V bottom. We started up here a couple days ago on the 21st, came crashing down, not crashing, came pulling back hard down to these lines and rallied right back up from it. Pretty much within, just about within 48 hours. From this candle to this candle, we're almost back up in the same place. Give it a few more minutes beyond 48 hours, and it actually does it. So right back up at this price. That's at 9 o'clock. This was at 840. So give it 48 hours and 30 minutes, and you're right back at that level. That's a really nice V bottom. So after V bottom, it chopped around for a little bit, then continued on up, retested, stayed above all of this. So anybody who shorted this was still in, hadn't exited here. They're still trapped way up here. They're not getting out yet because this rallied even more. They're going to be looking for this to roll back over, come back down to 1925, come back down even into this range to get out for break even, 1950. It's just another nice round number. And it's pretty close to the midpoint between 1925 and 1972.50. So this is a little bit bigger picture. I hope that's all right for where you're looking at this going. I would still like to see a little bit more of a pullback. If we chop sideways in here, if we do a really small candle tomorrow, similar range to this, and just build up some more momentum, it'd be great if it's a bearish candle to go along with these bearish candles at this level, a bearish candle here, and then we gap above that. And what if we were to gap above this wick at 2008.76? Let's say, we have a bearish candle and then somehow we gap up to, what is this line? 2013. That would be a phenomenal move. That would just, trap all the bears except for these guys. Would trap these guys, but wouldn't trap all of them here and here. But I could see this can totally running higher. Looks like we got a squeeze starting to form. We're losing bearish momentum. A little bit of bearishness, a little bit of a bearish candle would be nice. If we can go a little more sideways for a little while. We've kind of broken the mold from what looked like we were doing here with the alternating bearish, bullish candles. We did it for a few more days. Bearish, bullish, bearish, bullish, bearish, bullish. Now it's just been bullish, bullish in a row. I don't know that we're right here yet because we haven't gotten above the bearish candles with a close. I mean, we got above these, but we haven't gotten above these. But what we did yesterday with a gap up and then today with an indecision, it actually does look like these three candles here: bullish gap up, indecision. We're just not right on the doorstep of the previous all-time high. That's a little further away up here, and we're right here. There's a little more bearishness ahead of us as well, which right here, it was only the all-time high bearishness. But nonetheless, it was two bearish candles and some of these bearish candles in here that we were above. So still looks similar. It's obviously not identical. It's, it is just fractal. It's something that's going to look similar, could repeat. If we have a little bit of a, a little bit of a pullback tomorrow, people could be buying that, missed the chance to get in today. And we'll just see if we're going to just rally on out. If we get a close up here, that'd be 4 bullish candles in a row. If we start to take out the bears, then we should just continue on up like this. And we really do have that potential. When we had a smaller squeeze, this was 2 candles, we moved up a little bit more and then went sideways for a while before continuing. For this one, we were forming a squeeze through this. It was actually on this candle that was the last one, and then the following day is where it actually triggered and then moved up another 4 bullish candles. It could do that again here. We just have a little more bearishness that we got into. And, this, if you look at the bigger picture of these last 2 to 3 weeks, this is a really nice rest. It's made some lower highs. Made some lower lows, made some lower highs. Getting to the point where we're almost at relative high. And then you have to wonder, okay, if it's going to go up a little bit more, could this be like a reverse triangle where it's getting a little bit bigger, and those get easier to trade on the inside. But at some point it'll break out of that triangle, whether it goes down more or breaks out and just continues to go up and go parabolic. So a lot of things to watch, a lot of key levels. This is an indecision candle on the day. And we've had some small ones that are similar to this at key places. Keep an eye on this. Go back and back trade how this worked out. Look at some of these indecision candles with smaller bodies. some of these even in here as we're making all-time highs, and just get familiar with how this thing could move. But I do really like how we stayed above this rest after battle, even doing a little bit of a retest. If we come back down a little bit more, I don't expect to just roll over from here, unless we're gonna make that kind of triangle, the reverse triangle on a fractal down to the smaller time frame here, because you can see that potential here. Like if you draw a line up here, that it could make an all-time high again, or come up to that level and then go back down. And this making lower highs. If we see that showing up on the 5 minute, we got a little bit of some higher highs here. Don't really have the lower lows here, but we do here. It's just a matter of, will it continue to do that? Will something break down, bring us down a little bit further? And then who is that trapping? And that's what we'll have to look at. So that's just speculating where it could go. Ultimately, I think that this has been a really nice rest, and we should move up higher. I mean, in the next months to years, we should be way higher than this. But it's necessary that this can pause. I mean, it's possible it can pause. It doesn't have to, but it makes sense to pause some more, just like we've done a number of times as we're forming squeezes. We get into these pause areas, and then it's just some chop. It's harder to get that 10R risk to reward, or reward to risk. And we just have to be patient, stay patient on how this moves. Look for those bearish, look for those smaller candles, like some of these. Like if you had just traded that candle as a bracket, I mean, the high and the low are 45 bucks apart. It would have been pretty easy to do. But when those candles show up, if they're not at a key level, you could just be getting yourself in trouble. Let's see, that candle was the 935 candle. So 935, what was this doing? 935, that's this one right here, right at the last point that, okay, we've got relative highs, we got higher lows. Are we doing this now? Broke out, retested. So could have gotten in above that and a stop below, and that would have worked. A lot of things would have worked, just recognizing the candles. I mean, I really like these three candles right here. They just pause, go sideways, don't quite get into 1990, which tells me, well, probably going to roll over. I've already made a high here, rolled back down, retested it now. It's like an evening star reversal here, breaking down, retesting, going sideways, giving everyone opportunities to get in with a move below and a stop above it. That probably would have been 2 Rs on the stock. Maybe not on an option. Just a matter of looking at when you actually get in. So let's see, these are three puts. This is 1125. So 1125 was right here. Yeah, to see that move quickly, just go sideways for so long. There's just nothing really going on in there. Bears aren't really getting the handle of things. They're just going sideways. It does actually droop down a little bit lower. But some of the bearish moves are these candles. Once it gets back up here, this is an area that you could have been going bullish on, thinking, hey, we're going higher, get a close above the highs, and then pretty much an inside candle, big bearish, retest, and then this is where I'd be looking to say, hey, we've got an inside candle, gap down, go bearish, or get ready to if it gets a retest. So there's some really clear things, some clear lines to trade bullish and bearish from today, and just raking in the R's doing that if you did it that way. So anyway, I hope you like this bigger picture deep dive, a little bit of everything except walking through the day. I mean, we still walked through the day a little bit. We're just gonna get through all of it, but hopefully this makes sense and you're doing some similar assessment yourselves. Hope you enjoyed this video, and we'll be back with another one very soon. This is Justin AMZN.